Something is wrong with my video here. So Priya, still not working. So I could see use Zoom just half an hour before it was working. Now I see it's not working.
I think let's not worry about it.
Just if I can share my screen, if you can see that or not.
Sure, you could try and works.
Okay. So you are seeing the screen. Okay. So no problem. Okay. So
ये मेरा मीटिंग चालू हो
All right, great. So if everyone could just, except for Professor Das, if you could mute your mics, I think we were good to get started. All right, everybody, welcome to this edition of the Build for Her Forum. Today is quite a is a rather special edition, as those of you who have been following us for the last 8 or 9 months, you know that at each Build for Her Forum, we typically talk about experiments, whether they are product experiments, strategy experiments that various founders and other practitioners have deployed in their own context to build for women. However, today we take a little bit of a backseat and we look at what is the impact of building for women. In day-to-day business cycles, we see that validating impact can be a little difficult. However, with access to maybe large data sets and a more rigorous sort of tracking methodology, and over a larger period of time, mapping these impacts and the exact perhaps initiatives that lead to particular impacts can be very, very beneficial for both practitioners and for evangelizers of women-centric tech. So with that brief introduction, I'd like to welcome Professor Abhiman Das, who is a professor of economics at IIM Ahmedabad and comes with an absolute stellar background in macroeconomic policy and practice. A short reminder of the flow of the talk. Professor Das will speak for about 20 minutes, and then we will open the floor for an interactive discussion. Yeah, and if you have any questions that you'd like to ask, you can either park them in the chat window, or we'll sort of take them up once the talk, once Professor Das is done with the talk. With that, over to you, Professor Das.
thank you so much, Trisha. And thank you, Supriya, Trisha, and Priyanka for inviting me to talk on this particular and interesting topic on which I've been working for almost last 1 year or so. The title of this paper is A Nudge to Female Home Ownership and Mortgage Market Outcomes. And this program or platform name itself called Build for Her. And here I'm going to use that her program of SBI. So I think you can see there is a direct connect between what you are trying to achieve and what possibly has been achieved by some bit of nudge what is seen in data. Okay, so to tell you very frankly, I'm going to show you what we found in the data and what we found after analyzing the data. Maybe in many ways, all of you can contribute to understanding why that happened. It's not, I know I'll not be able to tell exactly why that happened, but it happens. That's what we are showing from the data. And during the discussion, I think if you can highlight your understanding how and why it happens, would be even more useful. Though I'm going to give some, I think, reason behind it, why we find it. And I think that's it. It's a joint work with 3 or 4 of my own earlier co-authors. So the best part of this entire research work was availability of mortgage loan data from SBI. And SBI means we are talking about roughly 40 to 45% of Indian home loan market. So it's what it shows possibly reflects the reality of India indirectly. So I think what it means that it's not just about acceptability for a particular experiment I'm talking about. I'm talking about a mortgage loan or 50% of the mortgage loan in India, where this experiment worked or not worked. Either way, you can talk about. So let me start. India is, in terms of gender gap, I think one of the stark ranking what we could see. We are 127 out of 146 countries, and which does not give us enough confidence about what we do, particularly to empower women. Okay, so that's very clear from this. But the idea of this paper comes from a particular lead. The appointment of these two women, that's what I thought I'll put their pictures. Arundhati Bhattacharya became SBI chairperson in, I think, in September 2013. And within her taking over, within 2-3 months, she decided to do something about Indian women. And whether she decided to do something for Indian women or not, at least she decided to do something for SBI. I think it could be more appropriate to talk from the SBI perspective. Of course, that has a lot to do with women, what she felt. And at the same time, not just in SBI, you find there were all women Bharatiya Mahila Bank, which subsequently got merged with SBI. Now no longer it exists. And also that time we got, LIC chairperson also happens to be lady. And what she did is the following. So she did, you see, I hope you can see this screen quite clearly. My screens are very simple. I'm not showing any regression or anything. It's basically some summary statistics. So SBI announced a discount in loan rate of 5 BPS for home loan made to women in December 2013. So that means talking about within a quarter, she decided to introduce this discount to the loan rate for the home borrower for women. And this program she called Har Ghar, her home. And what are the key components of this? The first or the sole applicant must be a woman. The home must have a woman as the first owner. All loan applicants are liable for the full amount of the loan, only applicable for new loans. Below three, I think that the last 3 points are quite common. You can find in many home applications, but in terms of giving this discount was I think the new part in the entire nudge to him. And then SBI itself, promoted on that year in its annual report that it was to empower women and promote home ownership among female borrowers. Remember, I'm talking here about ownership of a asset class which is very special, particularly very special in India, and particularly very special for women. And possibly that has something to do with why we get such results otherwise. So this was the plan. This plan led to something remarkable happening for SBI. You see this particular graph. I think this summarizes everything of what I'm going to say here. This is share of female loans. I'm talking about mortgage loans. This share, the roughly female loans were close to 14 to 15%, or it was on this range, roughly around 18 to 20%. That suddenly went up to as high as 24%. So you can see there was a significant jump of share of female loans in the mortgage for the SBI. And this was even in SBI 2014 annual report. It reported SBI Har Ghar, which offers a concession of 5 BPS on the prevailing home interest rate. This scheme has been well accepted in the market and accounts for 24% of the incremental sanction of home loan. You think about it, what it says, the last part. Now accounts for 24% of the incremental sanction of home loans. That means out of 100 loan given, roughly 25 loans are coming from those women where they are getting this benefit of IBPS points. It's a substantial increase in terms of financial, I think, reach to women just by doing this. And if you see from the macro side, it gives of course, but the micro dimensions are even more stark. Yeah, This, if we plot in terms of a kind of pre and post, pre is 20 to 2013 and post is 24 to 2015, 2014 to 15, then you do, percentage of female loans, percentage of female post minus percentage of female pre by pre. That means I'm talking about pan India effect, share of female primary mortgage borrower all over the India. You can see the increase was almost everywhere, and the I think the darker shade increase is 47%. So that means it was not just about, this is a graph of all Indian districts. So the increase you can see everywhere, except few places negative, I think, but I think most of the places pan India effect was visible, that the women loan for home borrow for mortgage went up across India. So what it means, in terms of percentage of increase, it was significant. Also, in terms of special distribution of mortgage borrower, also it was quite significant. So this is the experiment, a little bit of success from the bank side. But if you look at the what I'm going to do in this, that first I'm going to establish that this was actually a really small ticket benefit. In true sense, it was a nudge. Whether you like to call it as a nudge or you call it a token, doesn't matter. But the amount was actually small. I'm going to show you. Second, I'm going to show you that how does this affect the credit risk credit risk of the loan portfolio. This is the second question. Third, in the section of the part 2 of the paper, what we are trying to do, does this experiment has anything to do with women financial decision making? And this is a kind of, I think, quite unique in this paper. What we find, what we did, these women got loan from SBI, and we know their repayment schedule. The data allows us to do that. What was interesting for us in during COVID moratorium period, when Reserve Bank allowed allowed moratorium for quite some time, we found female loans tend to continue repayment during COVID. They did not stop. They did not take the repayment, the moratorium benefit. And this also brings some dimensions, as if, the moment you make them owner of a house, possibly their decision taking ability within household, I'm talking about intra household decision making, particularly financial decision making, becomes, I think, much more dominant in terms of, I think, providing greater agency for them. That's what we find from the study. So first is data, just quickly, 20 to 23, we got data. From IIM, I signed an MOU with SBI. It was very hard. We worked for almost 3 years to get this MOU done and 1 year for the work. Okay. So finally we got data with all sorts of limitations. But anyway, that helps us doing a few things for the research. And this is one research what I'm going to show you. The same data has given us, by now I have 5 papers on different topics on the same data. Okay. So first, let me talk about why I'm talking this as a nudge. Okay. So was this 5 BPS at all valuable? To talk about in the, so typical loan, suppose, has in our sample interest rate was 7.5%, a 20-year loan principal amount of 5 million with EMI 7.5, it works out to 40,000 to 80. And suppose if we use EMI 5 BPS low, so this works out to be 40,127. So that means roughly EMI saving is rupees 153, which is in dollar terms is not even $2.5. Okay. So this much small, and if you try to even look at in terms of present value of saving, in terms of, I'm talking about 153 by 40,000 to 80, which is 0.38% of loan amount. And if you think that if you want to get a loan from SBI, your monthly salary required is about 80,000, this works out to be your 0.19%. Absolutely, these numbers are really, really small to make any benefit. So both for the bank as well as for the consumer, this looks like a nudge. So with this, some of the numbers, some of the gender gaps. You usually females, for a bank, they are not supposed to discriminate in terms of interest rate. But we do find when we aggregate, and that too when we match sample. I'm talking about if you match their age, tenure, loan to value ratio, collateral value. If you match that, we call it a propensity score matching. After doing that, you usually see a difference between male and female interest rate. You should not expect, okay? Ideally, this should not be allowed, but you do find it. So there is, whether there is a discrimination or not, I'm not here to talk about that at all, okay? My point here is to tell you that the gap actually started converging post this phenomenon. Okay, again, some of you can help me understand why this can happen. First of all, there should not be any gap. There should not be any gaps turn out to be true most of the other parts, but before that it did not. We did not find. That's number one. Number two, in terms of, suppose if you take the EMI benefit and then take it over the extended period of your repayment, entire full repayment period, and you find out the EMI for female loan is wherever EMI is, R plus 5 BPS minus EMI R. And if you put this together, what you find is something a little more interesting. Is that here I am showing you financial benefit by quartiles. Okay, so the percentage of female loans over loan sanction date, dividing the sample into 4 quartiles. What you find, this benefit for women, actually those are getting higher benefit. Beginning, you see, before that experiment, there is not much benefit for anyone, any side of the quartile. But those who are getting benefit, even if it is a small amount, that proportion is much higher. So if you try to translate that, it works out that a 1,000 rupees increase in actual benefit leads to 1.5% increase in the likelihood of obtaining female loan. So that is important for us, that the aggregate benefit over the loan period actually leads to higher proportion of female borrowers in terms of in the housing market itself. Number three, in terms of ex ante evidence, if you see in terms of the riskiness of their portfolio, you find that male here this is in terms of average income. You find that how does this credit risk work out over a period of time. In terms of average income, you see that male average income is much higher than the female average income. EMI to income ratio, you also find for male is much lower because their income is much higher. So in terms of, I think this gap, why I am showing this graph to you is that this particular policy does not change the income profile per se. They continue. And at the same time, their EMI to income ratio also does not change much pre and post of this incident. Okay. Now, with this, if I look at the default rate, which is important for us, default rate by design, before the policy itself, default rates were lower for female. And that started declining and declining possibly for both default rates are declining. I'm going to show you possibly this is far lower for the women subsequently. Hold on for another slide. So maybe another 2-3 minutes I'll take. And then this moratorium period, what I told about the RBI policy, this allowed them to pay a little later, but that deferment of EMI, no waiving of principal or interest payment, interest accrues on unpaid balances, that happens after the moratorium period. EMI will of course increase and loan tenure is also extended. This benefit, we try to work it out. So, and this was implemented on all active personal loans were eligible. Messages were sent to all customers. If repayment is done through auto deduction, consumers who wish to skip repayment need to inform the bank. Otherwise, it was deducted as scheduled. If consumers make repayment by themselves, not by auto debit, they do not need to notify the bank. They can simply refrain from making the payment. That was the plan. And in this repayment schedule, if you can find out, the new EMI becomes 41,544 with the same example what I showed earlier, giving the example of the NAS. So additional EMI they were paying about 1,274, which is looking substantial. Remember, a family which is running maybe liquidity crunch, for them this matters. Possibly this is one reason that you find women continue to not go for that additional EMI. They continue to pay this. They do not want to defer payment further. So, did the response for taking moratorium during COVID vary by gender, and why? And is there relating to geography, culture, education, and this I did quite detail in the paper. What you find something nice here. You can see that for male, missing repayment was higher than female earlier as well. See that graph from the left hand side. I'm talking about the left of this. Male missing repayment was higher earlier as well relative to female. Female were paying, but during the moratorium period, male actually took the missing repayment. Male became much higher relative to women. That gap actually turned out to be significant during missing repayment period. Let me again emphasize this point. During that period, both male and female were allowed to use missing repayment. Female also used it, male also used it. So far, their difference in their repayment never found out to be significant. But during that period, when there was a possibility of women also to miss, they did not. And that difference is significant. This is what I'm talking about, the kind of intra household decision, financial decision making. That's what the female borrower repay more during COVID. And there could be many confounding factors which actually can show up in the results. I do not want to, I'm happy to share the full paper with you, but all these we did, and we did not find this happening. And then the default risk also, what we see here, there is no change in the default risks per se. Default risk was always lower for female. The point what I'm making here is that the post experiment default rate remained very similar to that of men and women. That did not change. So that means this experiment did not change, I think, dramatically the entire risk-taking behavior of women. But when it comes to repayment, actually they did a very different way. Okay, so that is another point. So gender gap does not change significantly over time period pre and post COVID. And in conclusions, what I just wanted to tell you, even what we find from the data, a small nudge in the sense of giving only 5 bps point, which makes very little, I think, problem or issues for a bank, can generate something very drastic in terms of getting female borrower and then making them owner of a property. And then what we find here, that female loans are more capable of maintaining repayment during difficult times, providing a potential explanation for why default rate is lower for female loans otherwise. So thank you. I'll stop it here. I think I am roughly on time, Supriya. Okay. So I'll be happy to take any questions, but I would expect you guys to help me out to understand why and how this can work out. I'll stop sharing the screen.
Sure. Thank you for that elaborate and very, very informative and thought-provoking presentation, Professor Das. House, if there are questions, please feel free to come in. Do raise your hand so we know who to call upon. Does anyone have a question or a comment or something from your own experience that you would like to bring to the conversation?
Okay, so while there may be other questions, I have a few very, very urgent ones. This is absolutely fascinating, Dr. Das, and thank you so much for sharing this with us. I have a couple of questions, and entirely, I think just my understanding issue. On one of course, you showed that district-wise map and sort of differential uptake of home loans. I'm not sure how does it work in or for banks? What drives some districts to uptake a scheme more than the other districts? Any sort of explanations or any information that you have there?
Okay. Okay, Supriya, traditionally India's mortgage market is urban based. Rural, nobody takes bank loan to build a home. So by design, you see this will be dominated by the urban borrower. So there is a geographical dimensions coming from the way housing market in India is served by the banks itself. Okay, so that's why why that was important for us to show is here is a bank which is pan India bank, and this effect was shown wherever there was a possibility to extend that loan. So it was not concentrated only in Bombay, Delhi, and other places.
Got it. No, understood. That explains it. In fact, I hadn't thought about it that there could be more urbanized districts as compared to the others, and that may explain for the difference.
Yes.
Super. The other, and please correct me if I'm wrong, the way that I am able to see the story, you're saying that a financial nudge, and in this case, it's very clear that it's a small nudge, financial nudge, brings the woman in the household into a decision-making role, as a result of which she's able to exercise agency over repayment of the loan, and which in turn, is beneficial for the bank. That is the full story?
Yes, but why that happens, Supriya, we are still not very sure why that will be what can drive that happening. Because the moment we talk about women are paying or they are not delaying their repayments, that means they are able to have access to additional income during that bad times also. Otherwise, they will not repay. So whether that they could they could influence their husband, this is where you remember she becomes the owner of the property now. She has a greater say in the both gold and houses are very special property, very special to women. In one go, remember the moment you become a property owner, whether you are employed or not employed, in one go you become a wealth owner, which can effectively give you an income stream. So because I think there is a possibility to generate an income stream from an asset class where women becomes the owner, possibly have more agency to drive the repayment, unless or otherwise, otherwise it would have been the opposite.
So one question, one sort of suggestion, not suggestion, but just a follow-on thought. I mean, in this case, this is a home loan. Only maybe in a part of the cases, this is an income generating asset. In other part of the cases, this may be, what the family uses for themselves, and therefore no additional income being generated from this asset. So I'm not sure if again, this is just a question. The other, I think, comment is, and I see Ravi here. Ravi heads Dwarai Dairy. This is what I think his team has also brought back as, just field experiences, which is when women dairy farmers, and Ravi, please, come in, as you find this relevant. His field agents have come back to tell him that when you're talking about a cattle loan to a rural household, if it's the woman that you're speaking with, she will ask about the size of the EMI. But if it's the male head of the household that you're talking to, he will talk about the total corpus of loan. And at least this team has been able to see that difference in how both the genders process. Hi, Ravi. You're muted.
I'm sorry, yeah. So absolutely, you're right. So our experience is similar. where when we go and speak to the, as part of the due diligence, when we speak to the applicant or the co-applicant here, one of the applicants should be a woman. So the women always they focus on how much I need to pay on a monthly basis, right? And yeah, so what are the charges? They clearly connect that what is my capability to pay. Whereas the men they focus on, okay, how much I will, what is the loan amount I get, sort of a thing. Yeah, you are absolutely right. Yes. Yeah, I just have two questions and one point to make. Can I take now, Supriya? Yeah, sure. So, thank you, Prof. Something very similar to this, we have been attempting to do it for cattle insurance, but as you rightly mentioned, that it takes time. We have been working with a few large insurance companies to bring in some sort of whether they can give a small benefit in the premium percentage to the women dairy farmers, so that the offtake of the cattle insurance and the impact due to this and the impact and the increase in the offtake of cattle insurance, which we are very very keen to observe, and we believe that it will happen, and this is a real testimony to that. I have two questions. One is, since most of these borrowers were from urban, what is the profile of those borrowers? Were they uh, uh, you know uh, self-employed, or they were homemakers, and if they were homemakers, then the cash flows were from the men, so how did they influence, number one? And number two is which is connected to the first question, is in case if the income is from the men, but are there any specific insights in terms of the influence in getting the EMI paid on a regular basis, despite the difficulties that the household goes through? Thank
Yeah,
you.
I think both the questions are, I think, absolutely, on the spot, and but unfortunately, in this data, what we got from SBI did not disclose much beyond the gender. So this is where few things we could not explore further, and it did allow us to the other dimensions of. Whether the persons belonging to scheduled caste, scheduled tribe, religion, those dimensions we have, but the occupation of the major borrower is not available in the data, so we could not explore this further. So that is, I think, a limitation of the data. But you are right, who are these people who are able to do these things differently? We are not able to get it from the data what we have. So we have, I think, on the similar line, Mr. Ravi, we have again reached out to SBI if they can give that little additional information, but we are not able to get it. In the meantime, SBI got a new chairperson, so we got stuck. So that is not even moving. And the second one, I think, Ravi, what did you say? Can you just repeat for a second?
Yeah, the second question was in Indian context. If you look at it, though this is a urban setup, but the cash flows are predominantly managed by men. So during distress or during difficult times, how are there any insights on how did women manage to still pay the EMI, though they are not they were not controlling the cash inflows.
I
That's
think, yeah, I think this is again possibly, the exact channel by which they are able to make payment. What we are doing is we are trying to, match this data with some of the income data, what has happened in Indian women during that period of time. So we are looking into two, three additional large data using NFHS and some IHDS. Also, we are looking into it, but that's a part of, I think, additional agenda. Mr. Ravi, we are still not there, but hopefully at some point in time we will get some answer to it. Yeah, but these are all valid questions what you are asking.
Thank you, Prof. Thank you.
Thank you. But I'm very happy that you are also getting similar behavior in the case of insurance product. That is at some point in time, I think, Mr. Ravi, if you can allow us to access your data. would be wonderful to experiment with. So,
There is a question in the chat from Karthik. Karthik, would you like to come in and ask your question?
Hi, I'm Karthik from Human Ventures. We are an agri fintech. We work with women from marginalized communities in rural India. So my question was that I really enjoyed this presentation. For the first time, we are building an ecosystem for goat rearing for women from marginalized communities. This for the first time they'll be earning an income of about 1 lakh rupees per annum, and currently they're earning zero. And why we were forced to do these IoTs was because of traceability, because there was no traceability for the goats, and because of the traceability to the Bluetooth tags that we are providing to the goats. Suddenly banks got interested, and they said that they would like to participate in this. Insurance also came in because there's no insurance product available for goats. So I would just like to ask this question, saying that what could be the drivers when we put the woman on the decision seat in the household, because most of the land is owned by the male farmers. Women they work the hardest, but no income is attributable to them. In urban areas, I understand that there is some income attributable to the women, so at least they can go and borrow. But in rural, there's no income attributable to them. My question was that, given this kind of a background and divide between the rural and urban, what is the nudge that can, motivate them to get into income generating professions?
I think first point, I think a large part of the answer lies because they are women. That itself tells a very big story. This is one side of the gender dimensions. Most of the times we try to evaluate in terms of their income stream and others. By nature, women are such that they're going to put family before them. Okay, so that drives many ways. Even if they do not have means, you will find they will take decision which helps the family. And when they have access to income, you will find they are always. That's what I think the point what Ravi was talking about. The moment it comes EMI, how much per month a woman has to pay, that is fundamentally more important for women. And this is where it's not about the idea of risk averseness. It is idea about, I think, women way of inclusive, I think, society, which is very different than the way men perceive. And this part, as we study more and more gender gap and other stories, this part has been corroborated by hundreds of authors and co-authors, that not everything you will be able to identify that whether it is the money which is driving force behind the decision making. No, actually, a large part of that would be their way of understanding inclusiveness in the society itself drives a lot. Okay. And in your case, I think what nudge you can, that's I think it's a tough question, because many places you will find that nudge is possibly not work. But a nudge where it will work, if I believe the story what I told you before you, is where you can make women owner of the property. That's the key part of the entire story. Okay, whether it is buying gold or whether it is buying a property, this will play out very differently the moment you see this is one property ownership we are talking about. We may also find similar things when we talk about gold bonds. When those gold bonds are owned by maybe women, possibly there are different dimensions. So I'm not sure I could answer your question, but this is very hard. We all understand there are differences happens across genders. But what drives it? Maybe the women here, strong women here in this group, they can possibly give some, idea how this happens.
Yeah, thank you so much. Really resonate with whatever you said. Thank you. And the same bank you spoke about is supporting us in giving this gold loan. So
it's very
I think
good.
we'll be ever indebted to State Bank of India for this. Thank you so much.
All right. Are there any other additional questions from the house? Right. We're also at time. So Professor Das, doing these build for us sessions, for forum sessions for about 8 to 9 months now. We've heard multiple times that it is very difficult for practitioners, for founders to generate enough evidence to convince the lenders at their back end to lend to women, because somewhere there seems to be some kind of a gender bias as to whether women are so okay, there is some sense of, oh, they are better repayment, as in they do better repayments, but whether they are reliable borrowers, especially in business cases. And I think evidence of this kind really helps bring that story together and build greater conviction in the ecosystem to look at women as capable and reliable borrowers and entrepreneurs. So with that, thank you so much for sharing your research, and thanks everyone for joining us on a Tuesday afternoon. Hope to see you all again on next year. That's when our
Also, Trisha, for the
yes.
opportunity. Thank
I'm
you,
sorry.
Supriya.
We couldn't get you too clearly, Abhiman. Could you come again,
I
please?
really don't know why the camera suddenly stopped working in Zoom. I really don't understand. See, so yeah, when I connected through your Google Meet, I could see my picture, but suddenly it went off. So
No, no,
anyway,
that just tells us that we have to get you in for another build for her.
oh, no, I'm very
Able
happy.
to-
I said, Supriya, I had already 5 papers on the same data. The other one, maybe in 1 minute, I'll tell you, when you go to a bank for a loan, bank does not give you the loan what you are asking. So bank gives you a based on a property value assessed by the valuer. They are some other entities, banks hire them and then they go out to get a market value of the property. Based on that, banks puts a LTV and then gives the loans to you. Basically, a bank assesses the collateral value, what they can put there in the book. That's the way it works. And what we found, something very interesting, there is a gap between actual value and appraisal value. A gap, I'm talking about what you are asking and how much a bank is appraising you. There is a gap, and there is a systematic pattern of that gap. And you find you remember the assessor does not know the caste and religion of the borrower, doesn't know anything. Still, you find the person belonging to reserve community finds much larger gap than the general side community. Okay. Also, suppose if you assess a value of a property which is in a Muslim dominated area, you find gaps are much larger, and there is an economic interpretation. It is not about they are discriminating because the properties belonging to a Muslim dominated region is very hard to find a market. So that's why the property value would be much less. So there is, I'm not saying it's a discrimination story. What I'm saying, there is a story to tell the way these gaps between what you are asking and what finally bank is appraising you, and there is a systematic pattern, which is very interesting to examine. We did based on the same data, what I'm talking to you. So
Very, very interesting. I think this call could go on for another 45 minutes, but
hey, Supriya, since I will not get chance to talk to all of you another minute, in that same appraisal gap, we found if a bank has a tie-up with a builder, appraisal gaps comes down. So these are all small dimensions, but which drives the property market a lot. So I'll share those. These are all almost ready paper. I can share it with you. Okay. Thank you. Thank you so much. Thank you, Supriya. Thank you,
Yes.
Trisha.
Thank you, sir. Like Supriya said, we could do maybe multiple more sessions on your work and your research. But for now, wrapping up, thank you so much
Yes.
for everyone joining.